Our next guest says he does expect solid results from NVIDIA, but is more focused on the company's outlook in the months ahead. Let's bring in Niles Investment Management founder and portfolio manager, Dan Niles. Dan, great to have you again. Good to see you.
Good to see you too, Carl.
So you will be focused on the April quarter forecast, eh?
I mean, I will be, but it's more, interesting to see what they have to say. My view hasn't changed at all, which is by the time you get to the middle of the year, you're going to get an AI digestion phase. The data that's come out at the end of last week, including Microsoft's CEO on a podcast, talking about he's looking forward to being a leaser of capacity by 27, 28, because he sees plenty of supply coming on, which means computing costs are going to drop. That tells me what I need to know. You got to remember the semiconductor companies are always behind the customers. The customers, they get a better look at what demand is, and then they will go ahead and change what the orders are after they get more comfort in the fact that that, in fact, is occurring. So I'm sure NVIDIA is going to be bullish on the call. Quite honestly, to me, I don't really care that much because I look at what the biggest spender of AI CapEx is saying, which is Microsoft. And one of the things that's driving the market down today is IR from Microsoft is in Australia, and they're sort of clarifying some of the notes that came out on Friday, and they're saying,
right,
we think supply and demand are going to be in balance by the end of our fiscal year, which, by the way, is June, so it's not that far away. And we think our CapEx growth is going to slow to more in line with our revenue growth. Well, CapEx growth is running 50 to 60%. Their revenue growth is running mid-teens. So you look at that and you go, okay, well, that pretty much confirms the fact that CapEx is going to slow down. And so for the NVIDIA print, it's more interesting to just see what they have to say. Jensen looks out 10 years in advance.
I don't know. Meta, Google, Amazon, Oracle, they've all been ramping up spending in a big way.
Well, they haven't. Because if you go, and I've written about this multiple times, look at Oracle. If you look at Oracle, Oracle came out and said for their next fiscal year, they're going to go ahead and double CapEx. So you look at that and you get incredibly excited when you don't do any of the math. When you do the math, you go, okay, well, their fiscal year ends in May. This implies $13.7 billion in CapEx. You already had 6 months go by. So that leaves $7.5 billion left to spend. In the most recent quarter, they spent $4 billion. So $4 billion doubled is $8 billion. That's not 7.5, right? So their sequential growth is actually going to go down in AI CapEx. But you look at the headlines and you go, oh, CapEx is doubling. That's fantastic. That's the problem with a lot of the analysis you're seeing is people aren't actually going through and doing the math, what it means sequentially. Much like with Microsoft today, there's a reason why after IR is clarifying this, the stock is going down.